very glad to have you all with us today. Our special guests are with us from the Small Business Administration. We have Arignaz Moradian, and so she will be talking about the 8A Business Development Program. And then we also have with us Yvette Davis from the Internal Revenue Service. And so we are glad to have you with us also, Yvette. All right. So we'll continue on with our program today. Our executive director, actually for our Minority Business Development Agency program, Tammy Hall, is not with us today. She is away at the State Construction Conference. And so our deputy director is there also, but certainly they send their welcome and just want to recognize all the folks for being here on today. They certainly understand the importance of ensuring that businesses know about the various resources that are available to you. And so as we continue to navigate through this COVID storm that we've been in for the last couple of years and continue to look to grow businesses, we want to continue to bring the resources before you that can assist you as you continue to strategize and to do the work that is necessary to grow your businesses. Also, we have with us Annette Stevenson. Annette is our MBDA program manager, and so glad to have her with us also. She has recently joined. All right. So with that, I'm going to go ahead and then turn the floor over to our first presenter. And so Arignaz Moradian. Arignaz is the Deputy Director for the Small Business Administration here at the North Carolina District Office. And so she's going to share some information. Now, the 8A Business Development Program is a federal program. And so it is another way to potentially complement the hub certification that you currently have, which is a state level certification program. And so with that, again, welcome to all. I will turn the floor over to Arignaz.
Thank you very much, Sharonetta. I appreciate it. Thank you, ladies, for having the U.S. Small Business on the call, U.S. Small Business Administration on the call today. We always love joining and partnering with you. So yes, as explained previously just now, the 8A Business Development Program is a federal program. It's a federal certification for federal contracts through federal taxpayer dollars. So next slide, please. So today I'll briefly cover program eligibility for the 8A Business Development Program, some of the benefits of the 8A program, things that you should consider before applying, briefly about the application process and timeline, and just a little bit of helpful information. Next slide, please. Okay, so just to kind of put everything in context here, the federal government has a mandate that 23% of all spending at the federal level go through small businesses. Okay, so the federal government, just like the states, just like the local municipalities, has their goal for small business contracting in order to continue engaging that industry base and ensuring that they get their fair share of contracts. So just another sort of breakdown of that at the federal level, there's a goal of 5% of all federal contracting dollars to go to women-owned small businesses, 5% to go to small disadvantaged businesses, 3% to go to hub zone businesses, and 3% to go to service-disabled veteran-owned small businesses. So some of you may have heard about some of the recent changes in terms of some of those percentages being increased through executive order by the President of the United States. So that is true. So those increases are at the federal level. And at this point, I'm not aware that they have been implemented per se, but I know that the government is in talks to kind of, figure out how exactly those increases in small business goals will be implemented federal wide. Next slide, please. Okay. Okay, program eligibility. So again, we'll talk about specifically the 8A business development program and the 8A certification, but there is also other certifications, as mentioned on the previous slide, for woman-owned small businesses, hub zones, and service-disabled veteran-owned small businesses. But we're focusing today on the 8A certification. Next slide, please. So to kind of, again, put in context, what are some of the core objectives of the 8A business development program? Really is to allow businesses a 9-year term, so allow socially and economically disadvantaged businesses a 9-year time frame to really grow, to understand, get trained up, work with a business opportunity specialist at the local district offices, SBA district offices, and really get trained up to understand over that 9-year time frame how to work with the federal government, what types of processes the federal government utilizes, what types of regulations apply to your business, who is your target market, how to market to your target market. So really, you should have some idea of kind of who your target market is before applying to the 8A program, but that 9-year term that you're in the 8A program is really meant to provide a sort of opportunity for you to learn in a setting where you have benefits to access contracts that other small businesses outside of the 8A program do not have. Next slide, please. Okay, so as I had mentioned previously, the 8A business development program is for socially and economically disadvantaged small businesses. So what does that mean? So these are SBA's definitions of what an economically disadvantaged individual is. First of all, your business has to be small, according to its primary NAICS code, according to its primary 6-digit NAICS code. Additionally, the 51% owner or owners separately must be deemed economically disadvantaged. So economic disadvantage means that each individual does not have a personal income, so an adjusted gross income of more than $350,000 averaged over 3 years. That their total assets, including business and personal assets, does not exceed 6 million. Oh, I think there we go. Does not exceed 6 million. And though each individual's net worth does not exceed 750,000. So when we're talking about 750,000 net worth, we're talking about assets minus liabilities, okay? And some things are excluded from the net worth calculation, including any equity you have in that primary business that's the applicant business, any equity you have in a primary home. So if you've got other homes, those, we don't remove any equity from those. And any money that you have invested in a qualified IRA account. So all of those funds are excluded from that 750,000 calculation. Next slide, please. Okay, so now we're talking about social disadvantage. Again, this is a socially and economically disadvantaged small business program. So what does it mean to be socially disadvantaged? You are presumed to be socially disadvantaged if you identify with any of those groups that are designated in section 1 of that slide at the top there. So if you identify with any of those groups, if you are a part of any of those groups, then you automatically qualify as socially disadvantaged. If you do not, however, you have experienced and you can convey through a preponderance of evidence. So you can convey through evidence, times, dates, interactions, stuff like that, where you were discriminated against based on something other than your racial or ethnic affiliation. So something like, let's say you are a woman in the construction industry, let's just say. I always like to pick on the construction industry, but maybe you can say, there were these incidences that caused me to feel like I was discriminated against because of my gender, or physical handicap, or affiliation with a certain cultural affiliation. So you can also write a narrative if you still do feel that you have experienced discrimination and you may be considered socially disadvantaged for this program. Next slide. There is also a requirement that you have been in business for a minimum of 2 years. Now, the reason why there's that basic requirement is because the federal government wants to ensure some minimal level of potential for success in the program. This program it's not really built for startup companies. It's built for companies that, they're doing maybe local government, state government, and, commercial, and they're looking to really kind of expand their footprint into a different marketplace. So if you haven't been in business for 2 years, but you still feel that you would be a good candidate for this business development program, you can write a waiver during the application process, and just showing that you have that substantial business management experience, that you have the technical experience to carry out your business plan, that you can ramp up, you have access to lines of credit, you have access to relationships with vendors where you can access supplies if needed, relationships with personnel, you can ramp up if needed. So you may be able to bypass that 2-year rule if you can write up a waiver for that. Next slide, please. Okay, so let's talk briefly about some of the benefits of the program. Next slide. Okay, so by the way, that fiscal year should say 2020, not 2019. So the 2020 numbers are listed there on that slide. The 8A program, vendors that are based out of North Carolina, so 8A North Carolina 8A companies in fiscal year 2020, that's the most current information the federal government has, most current data, brought in a total of $226 million in sales to the federal government through the 8A program. So these are 8A sales, okay? One of the huge benefits of the 8A program is its sole source authority. That's that bullet number 1 there. What I mean by sole source authority is, many of you may understand sole source authority as, the government has something it needs to purchase. There's like a service or a supply or something like that. There's only one vendor that can provide that service or supply because it's such a special, unique service or supply. And so the government is able to justify not competing that contract and awarding it directly to a company, sole source. Well, with the 8A sole source authority, it's a different type of authority. What it is if you are 8A certified, there can be, and you're a construction firm, for instance, in this case, good example, you don't have to be the only construction company that can perform a specific contract in order for the government to be able to award you a contract. By being through sole source means with no competition, by being an 8A certified company, you have access to direct sole source awards, no competition awards. As long as the federal government, feels you can perform the work, you've built that relationship of trust with that particular, contracting officer or agency, they can award a contract to you direct without going through competition up to $4.5 million. And that is something that our contracting officers use a lot because it really simplifies the acquisition process. So that is a very special authority that only exists within the 8A program. It's a 9-year program. Like I said before, it is one and done. And so what that means is you get your one shot. So you want to make sure that you're applying at the right time, that you're ready to really kind of take advantage of access to the federal marketplace in that manner. Because there's no going back. So once you're accepted into the program, once you and your business are accepted into the program, that 9-year that 9-year term begins. You also get a business opportunity specialist. So so I used to be a business opportunity specialist. I am currently the acting business opportunity specialist here in the North Carolina district office, but we're working on getting some more people out here. But once you get accepted into the program, your file gets transferred to the district office where your business is headquartered. And for that 9-year term, you're working with someone like me in the district office that can kind of help you navigate federal contracting. There's a lot to learn. It's a steep learning curve. For those of you that are doing federal contracting, you know what I mean. And so, you get that kind of person that can provide some one-on-one guidance and direction for you during that time. You can also joint venture and participate in SBA's mentor protege program. You do have to identify your own mentor. But the nice thing about the SBA's mentor protege program, it allows you to joint venture with a business that may not be considered a small business and still go after small business set-aside opportunities with that business. For instance, woman-owned small business set-asides, service-disabled veteran-owned small business set-asides, 8A set-asides. Again, federal level set-aside opportunities. And you also receive opportunities for technical training. We share information about, our 7J, which we have partners. SBA has grantees that work to provide technical assistance, both one-on-one technical assistance, cohort-based technical assistance, and training to 8A firms, as well as firms outside the 8A program. And we also, provide you access to opportunities like applying to the Emerging Leaders Program and other programs that may come down the pipeline through SBA. Next slide, please. Okay, so what to consider before applying to the 8A program. So next slide, please. These are some things to think about. There's 5 more, yeah. Yep. Okay. Thank you. These are some things to think about, before you apply to the program to really determine whether or not you're primed and ready to take advantage of the opportunities, to take advantage of sole source contracts, to take advantage of, your business opportunity specialist. So think about, do you already have a pretty decent balance of commercial and government work? It's not necessarily federal government work, but commercial and government work. Do you have some ideas of how, government contracting, either at the state level, city level, county level, how it works differently from commercial contracting? Marketing ability. Do you have the in-house capacity to market your business? Do you have some developed marketing plans? The reason this is important, this is an important thing to consider, is because a lot of times with federal contracting, you're dealing with contracts that can either be based, they can be contracts where the performance is in Puerto Rico or contracts where the performance is in Texas. So you really, there's a lot of lead time on these federal contracts. So you have to be able to kind of put forth the resources on the front end to write the proposals, to understand, what it is the government is looking for, to identify the right people. So there's a lot of front end, to identify who your target market is in the federal government. So there's a lot of front end information that you need to kind of prepare before going after those contracts. So that's what I mean when I say marketing ability. Proper NAICS codes. We're going to talk about that in the next slide. And I think I saw something come up in the chat about NAICS codes. So the government buys just about everything, but it does buy some things more than others. So we're going to talk about, where do you fit into that? Net worth requirements, we talked about that earlier. Are you economically disadvantaged? Diminished ability to compete, that goes along the economic disadvantage piece. If you're deemed economically disadvantaged, you're deemed to have a diminished ability to compete. Next slide. Okay, so the government buys everything, but it does buy some things more than other things, right? So who's buying here in North Carolina, and what sorts of NAICS codes are they buying under? So again, federal agencies, the Department of Defense, we've got a ton of military bases here in North Carolina, Department of Health and Human Services, the General Services Administration, USDA, HUD. Those are some of the top buyers in North Carolina. So contracts that are being performed in North Carolina, 8A contracts that are being performed in North Carolina. Some of the top NAICS codes, construction, facility support services, administrative and general management, so like program support type services. Landscaping is a big one through the 8A program, and also engineering. But again, the government buys everything, but there's some areas that it just really focuses in its buying more than others. So this is an example of that. Next slide, please. Okay, briefly talking about the application process and timeline. Next slide. Okay, because people always have questions about the application and the timeline, which fair enough. So when you apply, your application will either go, depending on which side of the Mississippi you live, your application will either go to San Francisco office or the Philadelphia office. Those are the offices that process the application. So those applications are not actually processed out of the North Carolina district office. The goal is for it to take about 2 weeks or so, about 15 calendar days for an initial review of your application. And then depending on, if it's found to be significantly incomplete or not, it may get returned back to the applicant with an explanation of what is missing. And basically, with no further action taken, if there's a lot of information missing, the applicant can reapply whenever they want, understanding what some of that information was missing in the previous application. If the application is not found to be substantially incomplete, then SBA will send a letter, saying within, 15 days or within a certain time frame, please submit this information. And then once the application is found to be complete, it will go into processing phase. So once it is accepted and found to be complete, the processing phase will begin, and 90 calendar days from then is when you should receive your answer. Next slide, please. And this is what on your left here, that's what the landing page of the application system looks like. So you apply for the 8A program at certified.sba.gov. That's where you apply. You need to make sure before you apply, as you can see there in that second section there, automatic migration, you have to have a profile, active profile, in the federal government's SAM.gov system for awards management. You have to have an active profile there before you can begin the application process and certify, because information from that SAM.gov gets pulled into certify as you're establishing your profile and certify. So you have to make sure you've got an active profile in SAM before you really can get and complete and establish your profile and certify to begin your 8A application. Also, if you go to certify.sba.gov, there's a knowledge base. There's a link toward the bottom called knowledge base. You can click on that, and there's a lot of really helpful information on what types of forms and documents you need to be collecting for the application, because you will need to upload a number of financial documents, business documents like your Secretary of State filings, your operating agreement, or your bylaws, whether or not you're a corporation or LLC. So there's a number of documents, tax returns, financial statements. So that certified.sba.gov website is helpful because if you click on the knowledge base, you can find a checklist of what documents you should be collecting. So once you begin the process, it's a little, it's faster for you. Next slide. And then some more helpful information on the next slide there. SBA does do monthly, well, we have access to monthly trainings. So if you'd like to learn about all the different trainings that SBA has, trainings either on federal certifications or trainings on federal contracting or government contracting, things like, pricing, things like building a proposal, things like building a joint venture alliance. Through SBA 7J program, there are a lot of different trainings. So if you join our newsletter for email updates, we send that information out on a monthly basis through our North Carolina SBA newsletter. So how to sign up for that newsletter is at the bottom of this slide here, and you will receive a copy of these slides. So you will be able to sign up if you're interested. Last slide, next slide. Okay, so if you've got any questions, feel free to reach out to our office. The email and phone number is on this slide. And again, you'll get a copy of this slide. So thank you very much.
Thank you so much, Arignaz. Great information that you're sharing. We do have a question or two in the chat. And so one question regarding the waiver of the 2 years in business. Does the record of successful contract performance refer to personal performance or performance where the company has the contract as the prime?
It can be where the company has the contract as the prime or as the sub. So it's successful completion of a contract, whether you're the sub or the prime. Okay. Would be helpful.
Okay. All right. Let's see. There was one comment to please use services as an example. Construction is one that's often used. And so those folks looking for services are also looking for some examples. I know you did include some of the services there when you talked about some of the primary NAICS codes where contracts are made. So Yogi, if you still, or I'm sorry, Elma, if you still have a question, then go ahead and pop it into the chat. I think your questions have been addressed at this point. And then we have another one. Oh, okay. Commenting, give you some props there for a good presentation.
Thank you.
All right. Any other questions that we have? We have just another minute or so. All right. Annette has a question.
Hey, how are you doing? It's nice to see you again.
Nice to see you.
So just was able to attend the National 8A conference, the nonprofit.
Awesome.
Yeah, awesome conference that really, it's just so many great connections. And so they did talk about it at the national level about President Biden, increasing the goals, and that the SBA at the national level had gotten approval from the agencies, DOD and the other civilian agencies to the goal of 11%. So that was really encouraging, right? So I'm sure, and like everything, it's got to take time to roll out. So that was good. But can you talk real briefly? I've heard certain changes, but I didn't quite understand them. Historically, it's been a great program, but when companies graduate after the 9 years, there's been a horrific failure rate of businesses because they, during the program, they were getting the assistance and could get the contracts. But after the training wheels came off, there was a high level of failure. So I understand there's some changes to the program to kind of wean. You know what I'm talking? Can you talk about that a little bit?
So There's something called the transitional phase and the developmental phase. So with the developmental phase are the first 4 years of the program. The transitional phase are the last 5 years of the program. And it's called, there's a requirement that 8A companies meet certain non-8A revenue targets during those last 5 years of the program, and they progressively get higher and higher as the company gets closer to graduation, in theory, to start weaning the company off of 8A contracts. If they've been dependent so much that their revenue was like 100% 8A contracts, if they've been so dependent, the idea is to kind of wean them off. But yeah, that is something that the administration is aware of in general, that's an issue.
Right. So how long has that been in effect? Like a year or two? Or?
That's been in effect for a while. I'm not a a very long time. I'm not aware of any other specific changes that have been, that are being worked on right now. But I do know that that's something that the administration has. When I mean administration, I mean our SBA leadership is aware of.
So is it working, do you think? I mean, put you on the spot. Is it working?
Well, I mean, that's been around for a while.
Okay.
So if they don't meet their business activity targets, they get restricted from sole source. So so I think it just kind of depends on company by company.
Okay, fair enough. All right, thank you.
Okay. All right. Well, thank you so much. I know we have a few more questions that are coming through. However, we have Yvette on to talk about the Internal Revenue Service programs around tax credits. And so we don't want to cut her short. We will provide the information from presentations. And so if there are additional questions that still are yet to be answered, you'll have some contact information there. So with that, we're going to go ahead and proceed to Yvette Davis, who is the Senior Stakeholder Liaison in the Communication and Liaison arm of the Internal Revenue Service. And so again, thanks, Yvette, and the floor is yours.
Thank you so much. Can you hear me clearly?
We can.
Awesome sauce. All right. So thank you so much. I appreciate the opportunity to speak to you all this morning. I am Yvette Davis, and I do work for the Internal Revenue Service. I've been with the service now for about 34 years, and I started off in collections as a revenue officer. So I've got a heart for small business owners, for small businesses. A lot of my inventory contained small businesses, right? A lot of them were just getting started. Some of them had been in business perhaps for 15, 20, 30 years. So when they came to me in collections, I found myself educating them on the things that they needed to do to stay out of trouble. Because let's just face it, no one likes to get a letter or a phone call or anything from the IRS unless it's a check. Let's be real, okay? But today, since
Very true.
true, right? No one wants to hear from the IRS unless it's a check. So today, when I realized I was going to be talking to the underrepresented, underutilized businesses, I thought, I was like, what is a topic that I wanted to share with them that perhaps they might not have heard of, or something that might have just gotten by them. So I wanted to talk a little bit about the gig economy, but specifically, I want to focus on record keeping as well as what's happening in the American Rescue Plan Act for you as a small business owner as it relates to your payments. And what I mean by that is, I want you to put in the chat for me, and I won't be able to see it. Let me know, yes or no, if you knew that as of January 1, 2022, third-party payment network providers will be required to send users a Form 1099-K. And that basically means that if you receive $600 or more in payments for goods or services through any type of third party like Venmo or Cash App, You know, a lot of folks in the last couple of years with this pandemic, a lot of new businesses popped up and they were using touchless services, if you will, to receive payments. And a lot of businesses who were already in place, they started using these touchless services to get payments. I wanted to make sure you on the front line, I wanted to make sure you knew that there is a huge change when it comes to this. Okay. So that's where I'm going with this conversation for today. So today, I'm going to talk about just an overview of the gig economy, but I'm going to talk about that 1099K, the payment card, and the third-party network transactions. And we're also going to talk a little bit about when it comes to voluntary compliance, the importance of the 1099K, why that all came about, and also record keeping. Okay, so that's one thing that I learned in working with small businesses, that most of the time they lost it when they failed to keep good records. Okay, so these are just some of the topics that we're going to talk about today on this particular slide. All right, so Sharonetta, did we get any responses in the chat? Did they
We
know
did get
about that?
responses. And so there were several that said, yes, they had heard about it. Some said no.
Okay.
And
Okay.
so, yes,
All
it's good
right. Okay.
information.
Good, good, good. So we're in the right place, on the right path. Let's go. All right. So again, using the chat, I want you to give me your idea of what it means, or what gig economy means to you. What are some examples of a gig economy type of job? Okay, I'm going to keep on talking while we're doing this so I can be a good steward of my time. So when we talk about the gig economy, I know you've all heard the buzzword gig economy. Some of us, we used to call it the sharing economy, and some of us have heard about it just recently in the past year, year and a half. So what do you think of when you hear gig economy? Okay, Sharon, Sharonette, I'm going to ask you again if you see any responses. What are they?
Okay. Folks are saying Uber drivers, side hustle,
Yeah.
hairdressers,
Yeah.
Lyft drivers, selling personal crafts.
Very good. Okay, all very good. So yeah, of course, the first thing that came to my mind when I heard sharing economy or Uber or gig economy was Uber and Lyft. Yeah, but what exactly is the gig economy? So first of all, the gig economy has a lot of names, right? And yes, someone said side hustle. Yeah, we call it that too. It's also commonly referred to as access economy. And these are just a few of the names that we call it. Essentially, it's a labor market based on flexible or maybe temporary freelance jobs or circumstances where an individual can actually earn income by providing an on-demand service, work, by selling goods and things of that nature, as some of you have already mentioned. So if you use a platform to provide services, like this is something that came about in the past couple of years, renting out a spare bedroom, okay, providing car rides like the Uber and the Lyft drivers, or if you are connecting your customers to provide connecting with new customers, maybe in a different location, different country, then you're going to do your best to provide those goods and services in a way that will probably involve gig economy. All right. Gig work itself is really fluid. And we've got a lot of individuals who are constantly entering and leaving the gig economy. And typically, it's fairly easy to enter the gig economy. We've got a great website on our. We've got a great web page on our website that speaks directly to the gig economy, irs.gov/gig. If you would go there to find more information, there you're going to find information about what is required as far as filing requirements, what it looks like as far as reporting income and expenses, things of that nature. Okay. For individuals who already have a full-time employment, gig work, this particular avenue for those who may have been laid off in the last couple of years the gig economy kind of gave them an opportunity to put more money or supplement their income, if you will, right? So this is why I wanted to kind of bring this to the forefront and talk about some changes that's coming about that you said initially you are already pretty familiar with. Some of you are already familiar with. So again, on this particular slide, you're going to see some additional examples of what the gig work looks like. Ride share, delivery services, renting spaces and property, selling goods online, on-demand tasks, freelance works, things of that nature. Also, everyone loves a good DoorDash, right? A good Uber Eats. All right. For a lot of us, when we were relegated to staying at home or working from home, these types of gig economy jobs, they became priceless, right? They were very valuable because we wanted to make sure we were staying safe during the pandemic. How many of you knew that selling goods online through eBay or Etsy shops is also something that could be considered gig work, and that you could be receiving a 1099K from the income you received from doing those types of services? Okay, so I wanted to give you a heads up for that. So I mentioned the 1099K. Some of you were familiar with it, some of you were not. So what is a Form 1099K? The 1099K is basically, it's called the payment card and the third party network transactions. This is what it is. And it is an IRS information return. And basically the IRS uses it to report certain payment transactions from what we call payment settlement entities. Okay, so a Form 1099K is required to be reported to the IRS prior to 2022, okay, if you receive payments like from a payment card transaction, that's going to be your debit card payments, your credit card payments, your store value cards, your credit cards from like I don't know, a Belks or something along those nature, like that. Okay, so a form of payment can be those types of things. All right. You can also think about, I want you also to think about the settlement of those payments from these third parties, all right? And there is a minimum amount that has changed. First, it was $20,000 gross payments, right? Or more than 200 transactions in a year. This threshold was commonly known as the de minimis reporting exception, okay? Now, with 2022 coming into play, the American Rescue Plan Act of 2021 amended the IRS's code of that de minimis dollar amount. So now settlement organizations are required to report third-party network transactions during the years of 2022 and thereafter until they change it. So in the amount of $600. That is a huge decrease from $20,000 in gross reportable payments down to $600 or more in gross reportable payments during the calendar year, again, beginning in 2022, okay? And that is regardless of the number of transactions that may take place. So that 200 transactions that was in play for 2021, that is no longer relevant, okay? That's a pretty big decrease. And this particular change is going to impact individuals who earn money in the gig economy, and specifically those who previously had not met that threshold. And therefore, these folks will be receiving in 2022 a 1099K. All right, so that's going to hit a lot of people, and there are going to be, unfortunately, those folks who are not familiar with this, and they're not going to realize what it is and why they're getting that 1099K, but you will. All right, so I'm going to move on here. I'm looking at the time. All right, so basically, when and why is a Form 1099K issued? The bottom line is these information returns are generally being issued as a way to increase voluntary compliance, okay? They actually also help taxpayers as well as your tax preparers. So hopefully you're in business for yourself. I'm hoping that you have a really, really good, reputable tax professional on your side helping you navigate your taxes for your business. Because I promise you, side note, whatever you pay them, you're going to get that money back 2-3 times over in the knowledge that they have as it pertains to applying the tax codes and changes to your particular business. You need a good tax professional. Okay. I'm back on track here, sorry. So basically the 1099-Ks were being issued to promote voluntary compliance, okay? The 1099-Ks are required to be issued to a taxpayer or a gig worker by the 31st of January, and this is with respects to payments for the preceding year. The first time some folks will be getting a 1099-K because that threshold dropped to $600 will be January 31st, 2023. Okay, let me just give you a little example here. So a Form 1099-K is issued, as I said, for payments for that a third-party network transaction received, right? And this is where that party is actually facilitating that payment. If that gig worker receives a sign-on bonus, a referral bonus, things of that nature, then that's not considered information that will be reported, on a 1099-K. They would be getting a 1099 NEC. That's the non-employee compensation, which some of you may be familiar with. But the payments that they received for actually doing the work or providing that service, if it's above that $600 threshold, then they will be receiving a 1099-K and even possibly a 1099 NEC. So basically, it is possible for a gig worker to receive more than one 1099 from the same platform for different types of earnings that they received. Okay, that's important to know. Okay, that may again be a 1099 NEC, the non-employee compensation, or even a 1099 MISC, the miscellaneous. Okay, and these two things are actually issued when a person or business earns income by performing services directly for an entity of some sort. Okay, so hopefully that's clear. So you may be getting a 1099-K, 1099 NEC, 1099 miscellaneous form in 2023. All right, let's see, where is, okay. So this is what the 1099-K looks like for those of you who may not have ever received one. Just wanted to give you an idea of what this looks like. Again, this is the payment card and third-party network transactions. I'm going to just review a couple of the boxes for you. Box 1, hopefully, I don't know if you can even see that well, but box 1A, now this is going to be where the gross amount of reportable payment card transactions will be, okay? And this is not going to include any type of credits or fees or refundable amounts or things of that nature, okay? So the gross amount that's reported on the 1099-K, when I say it's not going to reflect the amount, the total amount received, that's because, again, the payer of that 1099-K, they're not going to make adjustments for things like the fees they may charge, just like if you use a certain platform and there's a fee for it, that fee is not going to be included in box 1. All right. So let me give a better example here. So if you earn $30,000 from a particular in a given calendar year, and the platform that you're using deducts $4,000 in fees, the gross amount in box 1A will reflect $30,000 in gross reportable transactions, not the $26,000 that you actually received in deposits. So that fee will be included in that box 1A. Hopefully I said that right the first time. Okay, you're not going to see the $26,000 even though $4,000 of that was a fee. All right. So again, in box 1A, if you earn $30,000 in a given calendar year, whatever platform you're using, they're going to deduct a fee for that, right? But the amount that they put in 1A is going to show $30,000 in reportable transactions, not the $26,000, even though $4,000 of that will be reflected in fees. And if you've got a really good tax professional on your side, they're going to know that $4,000 in fees should be an expense, if applicable, for your business. Okay, that's a little side note once again, or hopefully encouragement for you to get a tax professional. Box number 2, I want to review that for a moment. This may be something new. This is where the merchant category code goes, and this is a 4-digit code that's assigned by the payer, and it basically is going to correspond to the description of your business. All right, so you probably need to know that as well. All right. 1051, 951. All right, so who issues the 1099-Ks? The Form 1099-Ks will be issued by the payment settlement entities, okay? And these entities make payments in settlement of the payment contracts, card transactions that your business may receive, third-party network transactions, again, that your business may receive. All right, where sometimes you may hear or you may see it categorized as PSE, which is just simply the payment settlement entity. They can be a payment card processor. We can also call them, what is the other term? Merchant card or merchant acquiring entities. Okay, so again, and these may be some new names for you. But again, go to our website at irs.gov, pull up the 1099-K and the instructions, everything that I'm saying, you can find that information there. All right. Again, I know this is probably new for some of you. Another thing I wanted to mention is the third-party settlement organizations. You may see it listed as TPSOs, and this could be a platform or app that the gig worker also uses. All right. So these are just different payment platforms that can be used by you as a gig worker or even in your everyday business, even if it's not a gig job. All right. I mentioned merchant acquiring entities. These are basically your different banks or other organizations that may process debit cards, credit card transactions on behalf of a particular merchant. Okay. Let's see. I'm going to move here. Third-party settlement organizations, TPSOs. These are just centralized organizations that have, they may have a contract, an obligation to make payments to participating payees. Okay, these organizations are essentially acting as a go-between between the buyer and the seller by they basically just transfer funds between accounts. In basically where you're making a purchase on one end and they're just settling the account. Okay. And let's see, what else did I want to say? Just a big reminder here. Again, I've got it on the screen. Beginning in 2022, I want you to know, bottom line, the minimum threshold has decreased from $20,000 or 200 transactions all the way down to $600. So you may be getting a 1099-K in 2023 for those transactions. Okay. There will be no minimum number of transactions necessary for you to receive a 1099-K. All right. And this is going to apply to information returns that are given to a gig worker, and it has to be filed with the IRS by early 2023. January 31st is the due date of the 1099-K. All right. Again, this could be from your PayPal or from your Venmo, things of that nature. Okay. Filing due dates. Okay, we already talked about the January 31st due date. If you are self-employed, I think I've got a slide that talks about the due dates of the estimated tax payments there. because of course, if you're self-employed, you're going to have to pay taxes for yourself. So you're going to have to know when those due dates are, so that when you file your return, if you're an individual and you need to make estimated tax payments and you think you're going to owe $1,000 or more, then you are going to need to make estimated tax payments. Okay, let's move on to the next slide. This has, okay, filing due dates for 2020. For 2022, the filing due date is April 18th. Generally, it's the 15th of April. If you need an extension to file your tax return, please file that 4868 by the 18th of April for this year. And this is going to extend your opportunity to file through October 15th. Side note, an extension to file is just that. It's an extension to file the return, not an extension to make a payment. Okay, so if you have a balance due when you file that extension on April 18th, if there's a balance due, you may be hit with a penalty, a late payment penalty, but not a late filing penalty if you file that extension. All right, so that 4868 is an extension to file, not an extension of time to pay. Okay, that's the big thing that a lot of people get confused with. All right, these are your quarterly estimated tax payment due dates. This year is April 18th and not the 15th, but the others are on point. And hold on, why is it not moving? Okay, this, I mentioned the gig economy. This is our tax center that I wanted to share with you all. Okay, this is publication 5369, brand new publication that was created to talk more about the gig economy, things to know. This is just a one-page publication, and it's basically intended to broadly cover the tax implications of the gig economy and most of the topics that we talked about today. It has some live links in it that will take you directly to some useful information on our website at irs.gov. This is just a list of hot topics and keyword searches that you can use. I believe you're going to get a PDF of this presentation at the end, so you'll have that as a resource. Record keeping, I wanted to really mention that very quickly. This is very important, okay? As a business owner, if you don't keep good records, you're not going to have a business for very long. That's just the bottom line, okay? So again, if you go to our website at irs.gov, we've got some great information there that's going to help you know exactly what records to keep, how long to keep them, things of that nature, whether it's for you as an individual or for you as a business owner. All right. These are just, I wanted to kind of share this with you as well for employment taxes. These are some keywords that you can use to do some research on our website at irs.gov. And you're going to be able to, we've got a really good link for our small business owners, small business self-employed. It's a tax center. If you go to the tax center for small business self-employed, you'll see all things small business about every topic that's listed here on this particular slide. All right, here you've got some great resources and more publications that are very popular that we use. And that is it. Sharonetta, I was trying to go as fast as I can to hit my time, but I think I went over.
Yvette, thank you so much. That was great information. Always great to have, certainly the latest and the up and coming things that are affecting us. And so I do want to try to grab a few questions here,
yes,
if we can. I know we're right at the top of the hour, but there was one question about Zelle, and with it, is it considered one of those third-party providers that would potentially be sending?
Yeah, okay, that's a great question. And the answer is no. Actually, Zelle is not a part of that because it is considered to be a part of a bank. I believe the banks, this is a system that the banks are using. So no, it's not like a Venmo or a Cash App. So no, not Zelle.
Okay.
No. Yeah.
Thank you. And then there's another question. What if I don't get a 1099 from those from whom you've accumulated over 600 in payment?
Okay, very good question again. So if you don't receive a 1099K, that's why I wanted to talk about record keeping. It is going to behoove you to document all of your payments received, okay, in whatever format from whomever. Side note with that, we are hearing that even though this is brand new for a lot of companies, right? This is brand new for Cash App, brand new for Venmo, so on and so forth. They may not have reported accurately the dollar amounts paid to you. So again, you are responsible for knowing and documenting what you receive in payments. And as long as you have your written documentation, whether you save it, however you want to save it, however you do your records, the IRS does not dictate to you how you keep those records in what format. As long as you can reconcile it with whatever you report to the IRS, then you'll be covered. If you're audited and you say you got a 1099K from Venmo and it says you received $20,000, but you can definitely state that no, I actually received $15,000 and here's the documentation, then that documentation is going to save you from having to pay taxes or in a penalty on the $5,000 that Venmo said that you received, but you actually did not. So it comes back to you as the business owner to have great record keeping and documentation.
Okay. All right. Thank you so very much. I did see one question also asking about some grant income. And so we do have another session that's scheduled to talk tax tips for small business owners. That one's going to be next Tuesday, March 8th. And so we invite you to participate in hearing about that as well. So thank you again, Yvette. Thank you, Arignaz, for the great information that you have shared on today.
Thank you.
And so thank you also Angela and Derek for participating and providing tech support for us along the way. Thank you to all of the business owners that have also joined us on today. We thank you so much for taking your time to be with us. And so we will share the information. The recording will be available online, usually not immediately. It does have to go through our communications group before it's released online. We will, however, share the presentation or the information that our presenters have provided. We will send that to you via email. And so with that, we are going to wrap up our session here today. Please do take a few minutes. We do have a brief survey that we ask you to fill out. And so we want to know what you think about the webinars. We want to know if you have some additional input for some future webinars and suggestions for topics that we might cover. Annette, as she has come in, is doing a great job also of lining up some very special webinars for you coming up. So again, thank you for joining us again. Have a great and a productive day.
And just a quick reminder, thank you, Shay, that, we are accepting clients for the MBDA and RTP. So if you are interested in becoming a client of the MBDA, there are some forms. Please reach out and we can send those to you for engagement. Okay, thank you.
All right. Thanks, everyone, so much.
Thanks.